All right, I believe we have Matt now. Matt, can you hear me now?
Yes, I can.
Awesome. So I was saying that, I mean, it seems like it's the in thing now. Everybody's raising rates. Everybody's hiking every MPC. But really, how effective is hiking interest rates in curbing inflation?
Yes, so in South Africa's case, it's pretty mixed. And to be honest, we think it's going to be fairly limited. And this is because in South Africa, the drivers of inflation are really broad-based. There are a number of things raising the inflation rate at the moment, and these are both external and internal. So from an external perspective, we have extremely high global commodity prices, especially for fuel and food. This is really driving the cost of the rate of inflation in the country. We're also seeing the rand lose value against major currencies like the dollar and the euro, and this is driving up the price of imports. And even though interest rates, in theory, should increase, should support the value of the rand, we're seeing it have very limited effect because at the moment, globally, there's a flight to safety, especially the US dollar, and this is dragging down emerging market currencies like the rand. Additionally, in South Africa, we've seen some domestic drivers of inflation, such as energy prices. We don't see these changing. We expect to see energy prices, especially electricity prices, continue to rise as the state-owned electricity utility Eskom increases utility prices. So certainly there will be very sort of limited impacts of these interest rate increases, at least over the next few months, on the rate of inflation. We expect inflation to reach at least 10% by the end of this year and then begin to fall afterwards.
Yeah, well, you did say that various factors, because we just heard how food security is being threatened also by load shedding. So obviously that's also another factor. But how will all of this affect the growth outlook of the country?
So it's moderately negative in our view. It won't fundamentally derail the outlook for the economy, but high interest rates will certainly contribute to a slower growth outlook. We have recently revised down our GDP growth forecast for South Africa from about 2.2% for this year to 1.8%, and we expect it to be around about 1.5 or 1.6% in 2023. Load shedding, increasing food prices, but also rising interest rates are all contributing factors. When we look at interest rates more specifically, what we did see during COVID and up until as recently as October 2021, so just under a year ago, interest rates in South Africa were at a record low, and this was a lifeline for the South African economy. And it's one of the reasons why the services industry in particular did very well. So now that we've seen interest rates reach more or less back to their pre-COVID levels, we will begin to see less dynamic growth in investment, especially capital investment. And we will also see the government's debt servicing costs rise as well. So this will really curtail government spending growth and investment. So certainly it will have a fairly or moderately negative impact on growth over the next year or so.
And I guess that negative impact will also spill over to the rand.
Certainly. So the rand has been really battered by quite significant volatility over the last couple of months, and it has depreciated beyond our original expectations. So the rand is a very highly traded currency globally. It's one of the most traded emerging market currencies. And it really is, as a result of the flight to safety by investors to the US dollar, lost quite a significant amount of value. The interest rate increase in our view, or these recent interest rate increases by the South African Reserve Bank, will prevent even more depreciation. So in our view, in the absence of these interest rate increases, the rand would have depreciated a lot further and a lot more than what we're currently seeing. But we are still expecting to see the rand continue to lose value, especially as we look towards the ANC National Conference at the end of this year, and especially longer term, the election in 2024, we expect investor anxiety to increase. So certainly we are expecting the rand to remain above 18 per dollar over the next year or so, and it could get as close as 20 for a sustained period of time. So certainly some more downward pressure, although these interest rate increases are curtailing the extent of the depreciation.
All right, Matt, thank you so much for sharing your research and findings with us. Enjoy your weekend.
Thank you, you as well.